and I have the hard evidence. I'm happy to send you the link, Mario. But it was corporate debt back in 1914 that was turned into Federal Reserve notes, corporate debt. And now with President Trump's signing of the Genius Act, legalizing stable coins, what people do not understand, but they really need to, is that the monetary system has been changed.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with a favorite of the channel, Lynette Zang. Lynette, welcome back.
Always a pleasure, Mario. It's good to see you, my friend.
Nice to see you too. It's been a while. And for the viewers, we're speaking on October 15th on Wednesday. And just before we started, Lynette and I were talking about how gold and silver are making all-time highs. And I joked, I said, who would have thought, right? And Lynette said, well, you and I. And I said to Lynette, well, there's a lot of people now who never talked about gold who are now calling for 5,000, 6,000. Even Jamie Dimon said 10,000 is possible. But before we move on, Lynette, just wanted to let the viewers know that Lynette has the YouTube channel, The Lynette Zang, and Lynette also has Zang Enterprises. Maybe you could just tell the viewers a little bit about Zang Enterprises before I come up with my questions.
Absolutely. Zang Enterprises, we execute a sound money strategy. Sound money is money that cannot be inflated away by governments or central banks and should be the foundation of every single portfolio and not because it's suddenly running. So I'm very prolific. We're keen on education, and our strategies start with your goals. And it is a long-term commitment for us to help you get through this trend cycle, this transition from this one currency system into the next one, which is exactly what gold and silver are designed to do. And it should be pretty clear to everybody right now that things are certainly changing quite a bit. But the strategy is built in layers. So wherever you are in the strategy, whatever you need should be supportive of you.
Yeah, great, Lynette. And yeah, I know that you've been following the precious metals since 1964, which is a long time. It's when I was born. But I think you had an uncle who had a lot of like the $20 gold pieces pre-1933, and you got interested in precious metals and markets. So what I wanted to ask you about is the macro picture for the markets and also for the Fed's, let's say, credibility, because I think that's important as well. It's one of the reasons why I think gold is accelerated higher. So yeah, you recently spoke about the Fed's crumbling illusion of stability, and I don't know if you saw Jay Powell the other day was asked about the gold price, whether it was a reflection of inflation, and he wasn't man enough. He wimped out. He said, "I don't comment on assets." So
Right.
I'll let you. Give me
Boy,
your opinion.
there's a lot to unpack there. And I think a lot of what you're referring to is the Fed's credibility, because frankly, in any Ponzi scheme, you've got to have confidence. So with President Trump going in, and he is a change agent, like him, hate him, his job is to change the system, and he's absolutely doing that. One of the things that you're referring to is the Fed independence. And I say that with some level of hesitancy because if you go back historically, the Fed has never been completely independent. So it's a joke. And what we've seen over time is that loss of independence, because the public is supposed to think that the Fed is doing everything in their power for the public's best interest. But it's not. It's to save the Fed and it's to save the private banking system. And it's really a merger of government and corporations, which is not the definition of democracy. But it's been that way since the very beginning. And something most people don't know, and I find this really interesting, and I have the hard evidence. I'm happy to send you the link, Mario. But it was corporate debt back in 1914 that was turned into Federal Reserve notes, corporate debt. And now, with President Trump's signing of the Genius Act legalizing stable coins, what people do not understand, but they really need to, is that the monetary system has been changed, period. And in our conversations, Mario, you remember we asked the question, well, what's going to justify the creation of this new money? And personally, everything that I'd read from the IMF, the BIS, the World Bank, et cetera, that it was either debt or purchases. And with the signage of that act, the answer is now crystal clear, and it's a combination of both. Because you have corporations, and governments can issue stable coins too, and you're seeing a whole bunch of them do that. But in order for here in the US for corporations to issue stable coins, they have to back them with dollars or treasury bonds. So like in the early 70s when Kissinger went to Saudi Arabia and created the petrodollar to create artificial demand for dollars, that's what this is exactly about, creating that artificial demand for dollars. Because when you, the public, go into, say, a place like Amazon, what are they going to do? They're going to nudge you to spend. And that means that your dollars will be converted into stable coins. And then that issuer, say Amazon in this particular case, has to turn around and buy the equal amount of treasuries so that these stable coins are 1-to-1. But here's the problem, and it doesn't matter whether it's US dollar stable coins or Chinese yuan stable coins or hoochie cooch stable coins, quite honestly. What are they backed with? They're backed with this garbage that's being devalued and inflated away. I want to ask you something, since you were in the City of London, which is kind of the heartbeat of all of this. In all your career, have you ever heard of Wall Street touting how wonderful the devaluation trade is?
No, I haven't.
Exactly.
This is the
Oh my,
first time.
really? Oh, well, start listening to Bloomberg. You will
Yeah.
hear it all over the
No,
place.
I've seen it. I've read about it. They call it the debasement trade, aren't they? And you
Yes.
mentioned the petrodollar. At least the petrodollar, yeah, that created demand for fiat dollars, but at least it was something real, oil. Stable coins is nothing, right? So you kind of wonder what they're gonna, will they back it with gold? I mean, even though I wouldn't want to give my gold in return for stable coins, I think it will fail, Lynette. Do you think it will fail as well?
Not only do I know it will fail, or I'm like 99.9% sure it's going to fail, I actually believe that that's what will usher in the hyperinflation that the governments need to repay all of that unpayable debt with currencies, fiat currencies that have zero value. So yeah, I think it'll fail. No doubt in my mind. I think it's about bringing in that next crisis that then they can use to justify pushing us into the other system, which I'm saying no to. And I'm
Yeah,
saying no just by positioning into physical gold and silver
yeah,
in my possession. Yep.
yeah.
Yep.
You mentioned the devaluation or debasement trade that they're touting this a lot. What do you think it means exactly? They're just trying to warn the public, they're just gonna trash the currency?
I think that's exactly right, but I don't know that the public really understands what that devaluation or debasement means. It just means a lot of inflation. And then that, all those dollars, those new, wherever you are in the world, that fiat currency that's created, it must go someplace. And it typically goes into to inflate fiat money assets. But we're also seeing it now rush into physical gold and silver. And there's a short squeeze. You know, you're in the UK. I'm watching the Bank of England. They have a lot less gold today than they did before they shipped it all over to the US in January. And I don't know, Mario, what happens when foreign countries demand their gold back?
Well, I think I remember Venezuela demanded its gold back in 2011. And I
Still
think it was
waiting, aren't
about a
they?
hundred. No, actually, it was about 100 tons at the time, and the Bank of England actually did repatriate that. But I remember that year, gold went from like 1,400 to 1,900, and I think they had to cover a lot of leases or shorts that because these central banks they use other people's gold to rehypothecate and sell gold. That's why it took the Fed, New York Fed, 3 years to send back some gold to the Bundesbank in Germany.
Yeah. And I think that what we're seeing in the silver market, the short squeeze, because there's a finite amount of silver. And I guess nobody remembers 2020 when they had to change the prospectus on SLV because they couldn't find enough physical silver out there to create those baskets. So since then, or was that 2022? But it was
21,
somewhere in that
21.
21. Okay, see right
Yeah.
in the middle there. But that was already an indication that there were more silver contracts out there than could be fulfilled with the physical. But hey, as long as nobody's complaining about it, as long as everything is hunky dory, but it's no longer hunky dory. And
Yeah.
they've shipped it over to the US, and then the US has delivered it out. So it's not available anymore.
Yeah, and people want the physical now, and the paper game is on its knees. Maybe we could move over to like the economy and inflation. I just saw a clip. Well, I didn't listen to it, but I read a comment about it. And Besant, the Secretary of the Treasury, apparently said that we're in the third inning of a new economic boom. You know, I'm not sure what economy he's looking at. I know that half of GDP growth in the second quarter was AI data centers. So without the AI boom, the economy would be in the doldrums. And we've seen the jobs situation
Oh,
deteriorate. And you recently spoke about rate cut and inflation, that the idea behind, and this is a Keynesian idea, I guess, that the more currency and credit you create, the more prosperous countries become. But that's not the case. So maybe you could explain to us why you said that recently, that rate cut doesn't necessarily mean prosperity, but it means inflation.
yeah, 100%. And actually, everybody can probably recognize this in themselves because there was a period of time up until 97 when taking on more debt actually stimulated the economy. But in 97, that was the peak of that. And the speed at which money moves through the economy has been slowing actually pretty dramatically since then up until 2022. So between 97 and 2022, you can see that they keep cutting rates. Cutting rates inspires more borrowing and spending, hence the debasement trade that we're talking about here. And then it makes things appear more prosperous, and they are for corporations. You look at corporate profits, they're through the roof. Even for through everything that we're going through right now, corporate profits are up substantially because they are too big to fail. But the standard of living for the normal person, when you have the president of GoFundMe come on and say that there is a huge amount of funding just for people to just pay their basic necessities, and people have to break their weekly groceries into 4 easy payments, you can see that, that bifurcated economy between the haves and the have-nots. I mean, it's wider than it was in 1929 and not getting better. So if there's even more debt that comes on by lowering that interest rate, well, that means that the dollar loses that much more purchasing power, which can appear okay. I mean, things always look good until they get tested. And that's what I'm wondering now. Is this the final and ultimate test, or is this just one of the tests? Because they want to take us into that surveillance economy. And I think it's amazing. This happens to be Ethereum, a representation of Ethereum, because of course this is really Ethereum. It's just a formula. But they make it look like gold, like this 1 ounce gold coin. Got Bitcoin and whatever this is. But there's a reason why they make this stuff look like gold. And in fact, there was just a recent report from the Federal Reserve, and on the front, they had a 1 ounce gold coin, but they had a big dollar sign on it. They want you to think that this is just like gold. This stuff, it's not. Why isn't it? One place, and they can control its value just by creating more of it.
I've
Same
got
thing with this.
XRP silver coin.
Yeah. But is that really XRP? It may
No.
really be silver, and that's fine. But yeah, why do they make it look like gold, silver, or platinum? It's perception management. That's what they want you to think of. And
Well,
it's just
the word coin as well is part of that, isn't it? Because
yeah,
it's nothing but a coin. It's anything but a coin. So
exactly.
yeah, I read recently, I think it's the top 10% in the US. They make up like 50% of consumer spending. So
But
the corporate sector in the top 10% and the 1%, for them, the economy is doing great, but it's heavily dependent on asset prices, I think, on the stock market and especially the AI boom.
100%. And let's kind of expand on that just a little bit, because we have minted lots and lots of millionaires in this country, but that's because of the rise in properties, prices, the inflation in property prices and stock prices and even crypto prices. But these people are cash poor. So it's just through inflation that it makes you look rich, but you really are not. $1 trillion companies, is that because they're really worth trillions of dollars, or that the dollar's worth that much less? That's really what it is.
Yeah, I think a good way to look at things is to price stuff in gold. And if you look at price of the stock market, the Dow and S&P since 1999, 2000, they've been going down. So it's like an illusion of wealth. And I think
Exactly.
this is what the rising gold and silver price is going to expose, in my opinion. I don't know if what you think about that.
I agree with you
Yeah,
that that
yeah.
is, and I think that you're seeing the gold and silver price, the spot market, that contract price go up because more and more people are becoming aware of it. And you even said something in the beginning of this conversation. And look at Morgan Stanley coming out and saying a 20% allocation to gold and silver. That is
Yeah,
kind of turns their 60-40
yeah,
stocks and bonds on its head.
yeah, and yeah, that was 3 weeks ago, or maybe a little longer ago, and it's amazing how the rise in gold and silver has coincided with that, and I expect other investment banks to come out with the same weighting. Jamie Dimon, as we said earlier, just said that gold could easily go to 5 or even 10. And I think Nassim Taleb, he said that gold now has become de facto the reserve currency. Ray Dalio is talking about gold. Everyone is joining you know, jumping on board, it seems.
Yeah. Well, I don't know if you noticed this or not because it was kind of quiet, but gold has actually become the second highest asset in central bank reserve accounts, overcoming the euro. So yeah, gold is definitely the de facto reserve asset. The only assets that's bigger than that would be dollars at 46%. But in 1971, those reserves were 79% dollars. So that's a huge drop over all that time. And a lot of that move has gone back to gold. And I would dare say within the next, I don't know, maybe month-ish or something like that, we will see that there's more gold going in or more wealth going into gold than even into treasury bonds. I mean, which has had an
Yeah.
exodus
Yeah.
since 2013. So it's not surprising. But that the holding of treasuries have been going down while the holding of gold has been going up.
Yeah, and Jamie Dimon also said that it's not that irrational anymore to have gold in your portfolio.
No,
And
it's
you know that the amount of investment assets in the US dedicated to gold is something like 1%, maybe even less.
not.
So, and I know a lot of people are saying gold is in a bubble, and the FT said yesterday that it's a mania, but I don't think so because if investors move like 1, 2, or even 3% to gold, that's going to make a huge difference. It's going to drive the price so much higher. So, yeah, is that the way you see it too?
Well, yes, I do not think that gold is in a bubble, but I do think that this is where it comes into understanding what the true fundamental value of gold is, and that is for its most important function, which is to hold your assets even over time. And so I can tell you for an absolute fact, based upon the level of debt that exists, or at the last time that I was able to pull that data, so 313 trillion, forget about the derivatives on top of it, and the amount of physical gold, because it's indestructible, that exists, the true fundamental value of an ounce of gold is somewhere in the vicinity of 40 grand. And so is it in a bubble? No, it's significantly below its fundamental value. And I'd say the same thing for silver. Now, technically, because I know you're a technician as well, is it, is it overbought? Yes, technically, it's more than 10% away from that 200-day moving average. So we could see a little bit of a pullback, giving that average a chance to catch up. But is it in a bubble? Heck no, it's not. It's severely undervalued. On the flip side, what about those assets that are valued in dollars or in pounds or in any fiat money? Well, the fundamental value of these currencies is zero, a big fat zero. So anything that is only valued in dollars or pounds or euros, well, here's a $10 trillion Zimbabwe note. I can't buy a thing with it, but I'm a trillionaire. So yeah, no, gold and silver are severely undervalued. Short term, they could be in a bit of a price bubble because I think the central bank is losing control. I mean, up to this point, the banks have been suppressing the price by just buying a whole bunch of contracts and creating a whole bunch of gold and silver that does not nor ever will exist. but they're not cooperating anymore. That's creating a conundrum for the central bankers.
Yeah.
And I heard that Powell, in fact, we have the voice clip of it if you want me to send it to you. So you could, he didn't know what to say. He
Yeah.
didn't know what to
I
say.
guess conundrum, that would be a term Greenspan would have used.
Yep.
Yeah.
Yep.
Yeah. So,
Unintended consequences.
yeah,
Or intended consequences.
irrational exuberance.
Yeah.
Debasement trade. It was triggered by Putin and China. But you recently, I saw just a few days ago, you spoke about the reset. And I speak quite a bit about the reset, and I think we've been resetting over time because the
Right.
dollar is falling versus gold. But you think they could have a really sharp reset, like overnight, like a big
Mhm.
reset? Could you explain that to us?
Well, number one, every single central bank has a gold revaluation account. In the US, even though people don't realize it, our currency, the US dollar, has been reset against gold 4 times. Back in 33, there were 2 times, right? The $35 from $20 to 35, then from 35 to 38, and again in 71, and then again in 73. So people don't know that because they tried to keep those overnight resets small enough so that the people don't complain. This one, I think, is going to be much, much bigger because they have to settle out the debt and they have to get rid of it because if the new system is based upon debt, they need a clean balance sheet. And they're, look, I could be wrong, but I'm willing to put my technical neck absolutely on the line and tell you that I am convinced that the advent of the stable coins is going to usher in that hyperinflationary event. And then they will do that overnight reset in a very large way. But it won't still yet be to the fundamental value because globally on average, when they do these overnight resets, they do it 3 times. But as we've seen in Venezuela and Zimbabwe, they're now on their 6th time. So I don't know how many times they're going to do it. But the only thing they have left is money printing. And the more of that they print, the higher in nominal terms, the higher that goes. So we could be looking at trillions of dollars for an ounce of gold. But let me tell you, you won't be able to buy anything just like that $10 trillion Zimbabwe note. It means nothing. Nothing. Don't be blinded by numbers. Understand true value. And when one system dies and it resets into another one, and I've been talking about the reset since 2009, gold and silver's job is to hold your purchasing power intact so that you actually have something to work with into the new system. Plus, you have the ability to take advantage of opportunities that'll present all along the way. But that's gold and silver's job because they're sound money that cannot be inflated away because they are used in every single sector of the global economy. This is used one place. This is used one place. These are used every place. It's not rocket science. It's simple supply and demand. And as long as they could satisfy demand with paper contracts, that's what they did. But now the tides are turning. And now people, entities, they want the physical. And there's not enough physical to cover all the contracts out there, let alone any of the additional derivatives that are hidden from us.
Yeah, the last revaluation or reset in 1973, they revalued it to $42.22. And today, as we speak, gold reached 4,218. So it's $4 away from 100 a hundredfold from the statutory level right now. And if they were to revalue to, let's say, 4,222 and 22 cents, I think that would put a rocket up the market price, because that means gold would never drop below 4,222. So I think they're in a tough situation, because if they reset, it could trigger a hyperinflationary boom. They would get, though, about $1 trillion from the Fed if they do this revaluation, which they could use. But is that how you see it, or you think they,
No,
no?
that is definitely not how I see it. That would be that would be like pushing on a string to revalue it to somewhere near current intrinsic market prices. That would not help pay off the debt. I see it significantly higher than that. And I think it'll look more like what we saw in Venezuela, not going up a few hundred times, but how about several thousand times? And they can't pull it out before that, because as soon as they do something like that, it fixes the debt where it is, where they really need to repay that with dollars that have no value. So
So
rather,
you think 10,000? What's your figure? More?
if they did it today, it'd be a minimum of 40,000.
40.
You know,
Okay.
that's if they do that on a one-to-one basis. But the reality is nobody knows, and you know this very well. You know, all of the big kahunas admit, the BIS, the FDIC, the IMF, the Federal Reserve, the World Bank, everybody, take your pick. Nobody knows the true value at risk, because derivatives are about leverage, and many of them at 1,000 to 1, or maybe even more than that. So you have $1 worth of equity and $999 worth of debt on top of that equity. It doesn't take a very big move to wipe that equity out, and then you're completely insolvent. And these are things that we can't see, because that is such an opaque market. So what I think Venezuela went up overnight the first time they did it, like over 3,500%. That's what I see. And they will do that to make an attempt to get the public confidence back, because that's what every Ponzi scheme requires, is that confidence and new money. So they've got to just try and print their way. But we've already seen since 2008 that every time they go in and do this massive amount of printing, it's like pushing on a string. It made an impact the first time they did it, less of an impact the second time, the third time, less. It doesn't last very long, the impetus, hence the devaluation trade. Yeah, they are bent on destroying whatever little bit of confidence is yet in the system. So I'm watching those charts on consumer confidence, because they keep testing the all-time lows. And you and I know it doesn't really matter what you're looking at. When you're looking at a chart, the technicals work the same way. So when we break below that, I think it's game over. I think that's when we will really see a very rapid rise in inflation, because we will see a very rapid loss of confidence.
Yeah, I agree, because most people think that if you see the economy like burn and consumer confidence deteriorate, they think you're going to have deflation. But no, you have a currency collapse or hyperinflation is not cost push inflation. It's based on faith and confidence. So I agree with you on that. Um, Before we wrap up, Lynette, could you tell the viewers a little bit about Zang Enterprises and what you do exactly for people? Try to help, how you help them navigate what's coming?
Well, Mario, I think you know that I've been studying currencies since 1987. And I've studied currency life cycles since that time as well. And they're just the repeatable patterns. So the sound money strategy that we execute is based upon those repeatable patterns, things that have happened at least 4,800 times historically and even currently historically. And so what's the next most likely outcome? Is this time different? Probably not. But it is based upon your goals, your circumstances, and what you have to work with, but the goals are first. And it's based on, it's a layered approach, but it's based on physical metals in your possession to sustain your standard of living, protect whatever fiat money wealth you've managed to accumulate, be in a position to take advantage of the opportunities that present, and potentially, if that's your goal, to leave a legacy for your family that they cannot outlive. Because it's critically important that we do this. But beyond that, so we do support communities both locally as well as globally to get sound money back in the system again. And that sound money, that gold, must be redeemable. In other words, me as a citizen, if I don't like what I'm seeing the politicians or the central banks do, I could pull the gold out of the system and force fiscal responsibility. It puts me, the public, back in the driver's seat again. And we better do this, or what they have in mind for our children is not pretty at all.
Yeah, that's what Howard Buffett, who was Warren Buffett's dad, he was a congressman from Nebraska. He wrote an article, I think, in 1948, and he said human freedom depends on gold convertible money. And I agree with him. I don't
100%.
like this tokenization and all that. If you can't convert anything into gold, then it's no good. Lynette, it was great speaking with you again, and I wish you all the best.
Thank you so much, Mario. It's always great when we get together.
Thank you. Take care.
Bye.